Welcome to the Capitol News. I am your host, Alex Karitis. Today is Tuesday, October 6th, 2020. Thank you so much for joining me. The title of today's podcast, The Circus Continues. A handful of stories to cover today. A couple relating to the president's tweets, which caused a lot of market volatility today. So we're going to cover that news. What is this guy thinking? Is this the president in his right mind, making these comments, tweeting what he tweeted today? Is this the result of the cocktail of drugs that he is on and the side effects causing some of this? Or is this just who he is? What's going on here? Is this what we're going to continue to see? And we're going to get to this, obviously, from now until Election Day. Chairman of the Federal Reserve, Jay Powell, was making remarks and is warning that if Congress doesn't come together to spend more money that we don't have, this will result in a tragic economic recovery, meaning there's not going to be an economic recovery, which, of course, we're not in an economic recovery to begin with. But here he is throwing out some strong language, really urging Congress to spend more money that we do not have. Otherwise, this thing is off the rails. Is the SEC, the Securities Exchange Commission, are they after General Electric? Well, we're going to read an article from the Wall Street Journal because if this audience recalls, those of you who have been with me for a while, last year we did a handful of podcasts on General Electric and Boeing. We said, the economy, and again, this is before COVID-19. So to me, and to the Capitol News here, those two companies, we viewed them as systemic risks to the entire economy. Because if either one of them went down or suffered major losses or were sued by government agencies such as the SEC, or with respect to Boeing because of the 737 MAX crisis, which is still ongoing, by the way, a litany of lawsuits, supply chain disruptions, the fact that they are one of the largest companies in the country and in the world, that there are only two major airplane manufacturers on the planet, Boeing here in the United States and Airbus out of Europe, the downstream effects that could have throughout the economy. Those two companies could have been what set off the domino effect, akin to what happened in 2008 with Lehman Brothers. So the SEC is out against General Electric, and even Boeing today had some more poor news, lowering their 10-year forecasts. So that's not good. But again, we're going to get to what the SEC is doing with respect to GE, and we'll read an article from the Wall Street Journal. Former Vice President Joe Biden campaigning in Gettysburg, PA today, basically trying to stick to the teleprompter, stick to message, fighting for the soul of the country, get back to some semblance of normalcy, whatever that means, calling for more bipartisanship. Now, this is the smart play. This is what I said several weeks ago. If Biden and Kamala Harris can stick to the script, if they can stick to the teleprompter, try to unite the country. I'm not saying they're going to be successful, ladies and gentlemen. I'm just throwing out my 2 cents, my analysis here when it comes to this election. Their policies are junk, just like they are on the Republican side. This is just my 2 cents, my political analysis. So if they can stick to the teleprompter, that's going to prove, in my opinion, successful for them. Just stick to that message, because it shows a clear and stark contrast between the president. Not necessarily Mike Pence, but Mike Pence goes along for the ride. There's no way you are going to take the oxygen out of the room if Donald Trump is in it, because he's already doing it. So Mike Pence is he's in the sidecar. Where Trump goes, he goes. That speech this afternoon by Biden was sticking to the script, and it's going to resonate with a lot of people, especially given the national disgrace and national embarrassment that we witnessed last week in the presidential debate. And the vice presidential debate is going to take place tomorrow in Salt Lake City, and I imagine that will be a little bit more civil. I am hoping that is more civil. Now, at this juncture, I really don't know how much weight the vice presidential debate is going to carry on anybody's vote. I think most people, as we're seeing across the polls, most people have already made up their minds. Early voting is underway. There have been some long lines in some of those states where that's taking place. So their minds have already been set. And to me, as I've stated before, this is really a referendum on the President of the United States. Are there people that are out there who are enthusiastic and strong supporters of Joe Biden and Kamala Harris? I'm sure there are. But the majority of them are just simply, okay, we gave him a chance. We don't like him anymore. Or perhaps they want to give him another 4 years. But most of this is a referendum on the president. That's why people have already made up their mind. Do you want another 4 years of this or don't you? And that's pretty much it. Are you going to view the Biden-Harris administration potentially as a transition to somebody else come 2024? Let's just put somebody in there who's been there, has the experience, can keep a steady hand, is not going to be tweeting out every 5 minutes about how they feel, why they're upset, Bring it back to some semblance of normalcy. That's why if they can stick to script, that's going to resonate. That's all they have to do. And then there's still questions up in the air as to whether or not there's going to be further debates. The president wants to tweet out and claim that, yes, he will be ready for the next town hall debate. Now, the question is, will they do this in person, or will they do this through some sort of virtual platform? That'll be interesting to see. That's supposed to take place next week, if it happens one way or the other. And of course, the president is still not out of the woods with respect to his COVID-19 positive diagnosis. But to the market performance, we have the dollar index trading at 93.83. This, well, we'll get to it. There was a rally in the dollar at the end of the day, massive sell-off across the board in the stock market because of what the president tweeted out later this afternoon. So let's just give you the timeline of the president's tweets. So the markets were kind of steady as she goes. Not a lot of movement in the Dow, the S&P, and the NASDAQ. There was quite a rally in the small caps, the Russell 2000, but nothing in the major averages, again, the S&P, the Dow, and the NASDAQ. And then the president tweets out that he's doing well. His physician says that the president is claiming that he is not experiencing any symptoms. And the S&P rallies and the Dow rallies, and there you go. Then later in the day, I think at about 3 o'clock, an hour left in the trading session, the president tweets out that he is ordering his representatives to cease all discussions and all negotiations with respect to another round of spending. And of course, the markets sold off en masse. And the Dow Jones Industrial Average ended up down 375 points, a turnaround of some 600 points, I do believe, because it was close to being up about a couple hundred points earlier in the trading session. Now, this is quite astonishing, because earlier the president wants to tout how strong the economy is and then how strong the stock market is, and then he comes out and makes that comment where he has to know, ladies and gentlemen, he has to know that coming out and saying we're done with these negotiations for another round of spending is going to cause a massive sell-off in the stock market. Yes, yet he does it anyway. So the question becomes, Is this some sort of side effect from the cocktail of drugs that he's on for some confusion, for some irrational behavior, which are some of the side effects we're told, which, somebody made a comment on Twitter about this, with the potential side effects being feelings of euphoria, confusion, and irrational behavior. And this individual on Twitter said, how would we know the difference as to whether or not the president was experiencing these side effects, or this is just the run-of-the-mill Donald Trump? I thought that was pretty funny. But it's true to an extent. The president pays so close attention to the markets. So, again, the question becomes, what kind of game is the president playing here? Is this a result of the cocktail of drugs that he's on? Or did he know that this was going to cause a massive sell-off? And he told his buddies, hey, why don't you go into the stock market and buy some put options, which means you're basically selling it short. It's a bet that markets are going to go down. Where's the SEC? The Securities and Exchange Commission. Where have they been for the past few years here with this administration? Where have they been? Where have they been for a lot longer than that? But this is just so in your face, it's ridiculous. It's an insult to people's intelligence if you're paying attention. And it's not that difficult to connect the dots given how obsessed and fascinated this president is with the stock market. He knows what his comments are going to do, to the upside and to the downside. Maybe earlier in the day, he said, hey guys, buy call options, meaning you're going to go long the overall market. I'm going to tweet out that everything's fine. I'm feeling great. Stock market rallies, they make out like bandits. Hey guys, do the opposite. Buy puts. Sell it short, because I'm going to tweet out that we're done negotiating. This is in our faces. This is market manipulation. Where's the questioning of this? Why don't the audience members at town halls ask the president this question? Why don't the Democrats bring this up? Perhaps they're all in on it. Maybe that's why. But this is a joke. And the president is basically holding hostage another $1.5–2 trillion in further spending, which of course to me is fine. I don't want any bailout whatsoever. I don't want any more spending. But just a few days ago, the president said, let's get it moving. Let's go. With these discussions, with these negotiations, let's pass something. The American people need it. Now, all of a sudden, they don't. A couple of weeks ago, we mentioned that the president said during one of his press conferences at the White House, go big. Remember this? He told the Republicans to go for the big one. Don't worry about it. It's all coming back to the USA anyway. Talking about further spending. Go big. Don't worry about it. Go big. Don't worry about it. It's all coming back to the US. A few days ago, get it done. Let's go. And now all of a sudden, I am ordering my representatives no longer to negotiate with the Democrats. And we are not going to pass anything. He's not going to sign anything until after the election. So is he holding this money hostage? So is he claiming that there's going to be another round of spending? $1.5 trillion, $2 trillion that we do not have. We just have to wait until after the election. And of course, he assumes he's going to win. Well, what happens if he loses? If he wins, we know that that was supposed to be what was supposed to happen. If he loses, it's a rigged game. And he's going to take this, most likely, to the Supreme Court. And in his tweet session this afternoon, the president says, I want the Republicans and Senate leader Mitch McConnell to focus on passing his Supreme Court justice nomination of Amy Coney Barrett. That is his primary focus, evidently, at least for today, until a squirrel runs across the south lawn of the White House and he changes his mind. I don't know what's going on. But that is why the circus continues. And this is on the day where, again, Jay Powell, chairman of the Federal Reserve, is warning Congress now in elevated rhetoric that without further fiscal measures from Congress, this is going to be a tragedy. this economic recovery will fail. There is no economic recovery. The several trillion dollars that we have printed out of thin air it's made its way through the system. And this is all we have to show for it. The official jobs report that came out last Friday, the last one before the presidential election, was not good. And of course, that was on the same day that you had all the hoopla and shenanigans with respect to the president going to Walter Reed. And we still don't know when the president last tested negative. So we still don't have that timeline. When was the president sick? When was he positive? When did he know it? And who else knew that information? Clearly his doctor would have. He's the one I would think was running the tests. This brings up a lot of questions. Well, he tested positive, but he was asymptomatic. He felt fine, but he still went out knowing that he could have spread the virus. But we can't get this information. And when you can't get that type of basic information, because the White House claims that the president, is tested every single day, well, that should be a very simple question to answer. They don't want to answer it, which tells me that this is some type of cover-up. That it wouldn't look good if the truth came out. But that's where we are. Federal Reserve is basically trying to extort another couple trillion from the Congress. Congress doesn't have it. Federal Reserve's perfectly fine with that. It doesn't matter. We don't have to worry about debts and deficits. Yes, he claims, the national debt is on an unsustainable path, but this is not the time to concern our little heads about it. Just keep spending. We'll deal with it. Even go bigger than what you're thinking, because it's better to be on that side than it is. It's better to do too much than too little, is now the argument. It's unbelievable what these people do, and they do it in our faces every single day. And people are still going to go into the booth. They're already doing it, voting for this two-party system, one side or the other. I don't know how much more you need to witness to leave these parties. I just don't get it. Here is some overnight trading action. The Dow Jones Industrial Average and the S&P 500 both are currently up about 0.4%. The NASDAQ 100 is currently up about 0.2%. The cash trade in Japan is down about 0.25%. Trade across the pond in Europe, a sea of green, anywhere from relatively flat in the UK, up as high as 1.5% in the Spanish markets. And the Australian cash trade is up about 1.4%. Recall yesterday the Reserve Bank of Australia decided to keep interest rates at record lows, and they are anticipating further rounds of spending as well. On the share price front, we have Apple, Tesla, Microsoft, Amazon, Alphabet, and Facebook all down anywhere from 2 to 3%. Tech got whacked at the end of the day, and the Democrats are coming out and claiming that they want to break up a handful of these larger tech companies. So that's something to be on the lookout for as well. WTI is trading at $39.92 a barrel. Brent is at $42 even, and natural gas is trading at $2.52. We've seen a little bit of a rally in the price of oil. This could have been on the back of dollar weakness, and it also could have been on the expectation of another major hurricane hitting the Gulf Coast. This is going to be Hurricane Delta, I believe is the name. So we are in the Greek alphabet. So this is one of the busiest hurricane and tropical storm seasons that we have seen in a long, long time. It might be one for the history books. So this could be a devastating hurricane. It turned into a Category 4, basically overnight, from a tropical depression. I think this is one of the quickest changes from a tropical depression, a tropical storm, to a major hurricane. So the weather is just as crazy as everything else. Gold and silver got hit today, especially on the back of the lack or the postponement of another round of stimulus, or spending, I should put it, because we know this is not stimulative. But nonetheless, a little bit of a bounce back right now overnight. We have gold trading at 1,882, so back below 1,900 on spot price for gold. And silver is at $23.45, so back below $24 on the spot price of silver. Uncle Sam's 10-year junk note is yielding 0.75%. So there you have it on the market front. Let's get into the SEC noise going after General Electric. Again, this is out of the Wall Street Journal. GE says it has received a Wells notice from SEC relating to accounting investigation. The SEC staff recommended civil action against the company for allegedly violating securities laws. Federal securities regulators have warned General Electric Company of a civil enforcement action over its accounting for a legacy insurance business, adding a fresh hurdle to efforts to turn around the once mighty manufacturer. The industrial giant said in a securities filing Tuesday that it received the so-called Wells notice on September 30th over the company's accounting for reserves related to an insurance business it had been trying to wind down for years. Now recall, ladies and gentlemen, last year when we were focused on General Electric, we were calling out Harry Markopoulos, who is a forensic accountant. That name might sound familiar to you because he was the gentleman who uncovered the Ponzi scheme of Bernie Madoff. Okay, so I'm putting some weight behind the abilities of Harry Markopoulos and his team, which is why we focused to the degree that we did on General Electric last year. And a lot of the accounting shenanigans that he pointed out was in relations to their insurance business. So here we have it. Is this all starting to unravel? We shall see. A Wells notice is a letter saying that the SEC staff is recommending that the commission bring an enforcement action against the recipient and offers an opportunity to argue why the action shouldn't be taken. It often serves to cap investigations that can drag on for years as the final step before formal litigation begins. The SEC and the Justice Department have been investigating GE's accounting for about 2 years after the company disclosed large write-downs tied to the insurance business and its power business. In a statement, GE said it has cooperated with the SEC and strongly disagrees with the staff's recommendation that the commission sue. The company said it would respond through the Wells notice process. The company also made some executive changes on Tuesday, including the retirement of the head of the GE Capital unit, which houses the insurance business. GE for years has been shrinking GE Capital, once a sprawling lending operation that rivaled the biggest U.S. banks, but nearly sank the company during the 2008 financial crisis. Gee, I wonder what they were engaged in. Accounting problems surfaced late in 2017 as GE was struggling with declining profits and cash flow following the departure of former CEO Jeff Immelt. The company later disclosed in January of 2018 that it needed to bolster its insurance reserves by some $15 billion and booked a $6 billion charge. In early 2018, GE said it was also the subject of a criminal probe by the Justice Department. Many investors were surprised by the insurance situation, partly because GE executives had repeatedly declared the company had shed its insurance risk. GE spun off most of its insurance holdings into Genworth Financial back in 2004 and sold much of the rest to Swiss reinsurance company 2 years later. But GE kept the risk for a block of long-term insurance policies written by GE Capital until 2006. Such policies pay for nursing homes and assisted living facilities. They have proved to be inexpensive problems for the insurance industry, which underestimated how much the policies would need to pay out. This will be an ongoing concern as we make our way through this decade with the massive amount of people hitting retirement, an aging population, going into nursing homes. So that's something to be mindful of throughout this decade and perhaps beyond as well. GE removed the long-term care liabilities from its annual report for 2012 and didn't put them back until 2018. That's when GE reported insurance liabilities of $38 billion, up from $11.1 billion the previous year, so a huge increase. Former GE employees said the insurance business failed to internally acknowledge worsening results over the years. These employees described what they called lax managerial oversight and buried risks that kept the company from booking bigger reserves. One former GE Capital employee said it was clear at the time of the 2004 Genworth IPO that a block of long-term care policies were toxic. This is also in agreement with what Harry Markopoulos was noting. Former GE executives said the company conducted regular reviews of its insurance liabilities and accelerated a deeper review of the insurance book after noting worrisome trends during 2007. Those executives say that GE acted quickly and responsibly to shore up the reserves after the liabilities unexpectedly surged. A shareholder lawsuit brought in 2017 by pension funds alleged the insurance accounting fueled a years-long fraud that inflated GE's results. GE has sought to dismiss the suit, saying in court filings that management mistakes, not fraud, were to blame for the company's problems. This is also an important paragraph in this article because this calls out lawsuits from pension funds. We know pension funds are underfunded. So we could see just, I don't even know how many lawsuits over the coming years because of our zombie economy. One zombie corporation after the next, being kept alive artificially through Banana Republic, printing press, money. These pension funds are going to want their money. When it's understood that this is accounting fraud, that this is just rolling everything over, the lawsuits are going to happen. This is why I'm focused on these two companies of GE and Boeing, but there are many others. The insurance problem is a hangover from GE's one-time reliance on financial services to drive its profits. At its height, GE Capital accounted for more than half of GE's profits, driving some who followed the company to criticize the unit as a black box that primarily served to paper over uneven performances in its industrial units. GE says it has brought on new leaders to run the insurance portfolio from outside the company and reviewed its accounting practices. In 2019, GE insurance executives said they were pushing to raise premiums and boost investment returns on reserves. In recent months, CEO Larry Culp has said the coronavirus has eased some pressure on the long-term care claims since some people have been reluctant to enter nursing homes. The lethality of the pandemic has driven up claims in GE's life insurance assets, the CEO said in July. In addition to the company's insurance accounting, the SEC is investigating revenue recognition practices in GE's power business in a $22 billion charge the company booked in 2018 tied to acquisitions in GE's power unit. The SEC staff hasn't made a decision whether to recommend any action on those matters, GE said in its Tuesday afternoon filing. GE's stock has tumbled, and the company has slashed its dividend to a token penny per share. It also has sold off various business units, cut jobs, and switched leaders, installing Mr. Culp as CEO in October of 2018. GE also decided to change auditors after more than a century, with KPMG hiring Deloitte starting next year. GE shares slipped nearly 4% today to $6.17. The company, once the most valuable in the United States, was removed from the Dow Jones Industrial Average earlier this year. As a part of Tuesday's executive shuffle, GE said the new head of GE Capital would report to the company's finance chief, while the head of the company's plane leasing unit would now report directly to CEO Mr. Culp. So there you have it, folks. More trouble for SEC. Once a titan of the United States in the Dow 30, no longer in the Dow 30, facing one investigation after the next, one accusation after the next, and perhaps one lawsuit after the next. It's either poor management or it's fraud or a combination of both. But this is a household name, which again is why I've been focusing on GE and Boeing, because of the systemic risks that exist within these firms for the broader economy. We are nowhere near out of the woods. The several $trillion, when you add up federal, state, and local, it's $9.6 trillion that has been spent so far this year. And this is where we are. We have a Federal Reserve begging Congress to spend more money that we don't have. And somehow we have an administration and a president who claims that this is the most miraculous, super-duper, V-shaped recovery ever recorded in history. So which is it? Somebody's lying. Somebody's not making sense here. 661,000 jobs, quote-unquote, created in the month of September. And we know most of that quote-unquote creation was just people getting their jobs back. Were some jobs created? I'm sure, but the bulk of them are just people being called back to work, which is still a good thing, but don't tell me they're created. Don't tell me they're new jobs. Sure, the official unemployment rate is at 7.9%, but that's not because of a super-duper V-shaped recovery. That's because more people have left the labor force. They've given up. So they're no longer counted, even though they're no longer working. Don't you love how the government counts? And yet we're also going after corporations. Nobody knows how to count. It's unbelievable. The circus continues. This is what this is. Looking deeper into the jobs report. The median duration of those unemployed is at an 8-year high. You have to go back to 2012. Again, the median duration of those unemployed is back at 2012 levels. Looking at permanent job losers, 3.8 million. You got to go back to 2013 to get back to that level. The various surveys that we have gone over here, the household surveys, half the country's broke. The small business pulse check. As many as a third of small businesses claiming that without further assistance from the government, they are very likely going to go out of business by the end of the year. Well, I guess so long, see you later. Even though there is still money that exists within the Nobody Cares Act that can be appropriated to these small businesses, in addition to the Main Street lending facility within the Federal Reserve. You get it? You get who these people work for? You see what's going on here? Protect the big corporations. Screw the small corporations. This is the Nobody Cares Act. Now, I'm not for this mumbo-jumbo nonsense, but they've already appropriated the money against my wishes and I'm sure against many of yours. You can bail out Apple. You can buy their corporate debt. Why can't you give it to mom and pop? Because the money's still there. Aside from the extra $1.5–2 trillion that might not be coming down the pike. This is all you need to know, ladies and gentlemen. Don't vote for these jokers. They haven't earned it. They don't deserve it. But that's it for today. The circus continues. We'll keep you posted on developments across the board in relation to all of this. Again, the debate tomorrow between the vice presidential candidates takes place tomorrow evening. I will be watching, and I imagine we'll have a conversation on that tomorrow evening. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.